Poised for Exit is a show for business owners who want to achieve a successful exit based on their own terms. Your business exit will likely be the biggest financial transaction of your life, and for most, you'll have one shot at doing it right. The topics and guests we feature and the stories they share will provide valuable ideas and strategies to improve operations and grow enterprise value so you can achieve the best possible exit outcome. Now here's your host, award-winning certified exit planning advisor, Julie Keys.
Welcome, everyone, to the Poised for Exit podcast show. Our guest today is a partner in a boutique private equity firm who will talk with us today about what sellers need to know about this type of exit option and how his firm sets itself apart from the competition. But first, let's hear from our show sponsors.
Thinking about selling your business in the next few years? Don't wait to start planning. I've seen too many business owners wait too long and regret it. Freedom Financial Partners are financial advisors who specialize in exit planning for business owners, helping you reduce tax surprises, protect what you've built, and quantify how much you need from the sale. Their proven process helps you think beyond your business so you can move forward with clarity and confidence. The longer you wait, the fewer options you may have. Download your free financial readiness assessment today at ffpforme.com/exit. That's ffpforme.com/exit.
This is Andy Kosumba, president of Calhoun Companies. We understand that selling your business is a big deal. Since 1908, Calhoun Companies has been confidently connecting buyers and sellers. From small family shops to large corporations, our expert brokers walk with you and guide you every step of the way, whether you're looking to retire or simply for a fresh start. If you're curious what your business could sell for, or if you're ready to start the process, head to calhouncompanies.com for a free and confidential consultation. Calhoun Companies, the confident choice for buyers and sellers.
My name is Todd Crow, and I'm the president of the Twin Cities Exit Planning Chapter. If you're a business owner and advisor and want to learn more about the world of exit planning, you're invited to visit the Twin Cities chapter of the Exit Planning Institute. You can expect top-level education delivered by subject matter experts at every monthly meeting. Grow your network and draw from the learning that could be a game changer for your business or your practice. There's no pressure to become a member, so come and see what the buzz is all about. Our meetings are held the second Wednesday of the month, 7:30 to 9 a.m. See the show notes for more information and registration links.
Exiting your business is a big deal, both financially and emotionally. I'm John Marquet, certified exit planning advisor with TrustPoint. We help business owners transition smoothly on their terms. Our focus is on maximizing value, minimizing stress, and giving you confidence in what's next. Whether you're selling or passing the torch, we make the process seamless. Start planning today at trustpointinc.com. That's trustpointinc.com.
Hello, Poised for Exit listeners. We are here today with Brian Cox, who is a partner with Traction Capital. Brian, welcome to Poised for Exit.
Thanks, Julie. I'm glad to be here.
Very happy that you could be here. There's a lot we need to talk about today in a very short period of time. And I like to start by having our audience know a little bit about you and how you got to where you are. I'm sure that your entrepreneurial journey is worth sharing. So let's start with that.
I'm happy to. And I think you hit the nail on the head. I'm an entrepreneur through and through. Middle school, I sold wrapping paper door to door. I was a Boy Scout. I sold Boy Scout wreaths. I started a lawn care business. I did that through high school, sold that business. I went to St. Thomas because they had a fantastic, and still do have a fantastic entrepreneurial program.
Yeah.
And at the time, there weren't many schools like that.
No.
So that's where I got my education, but I realized I still needed an income. I had sold the business. And so I started another one. I started lawn care again. I did that for another few years, and then I launched a motorcycle business out of my garage.
Wow.
I was an enthusiast, I still am, and I saw this need for used motorcycles, but done well, meaning a good dealership, a white glove approach, if you will. And so I bought a bike. And 10 days later, I sold it quicker than I thought. I made more money than I thought, and my company, which is now called Simply Ride, was born.
Wow, that's great.
I knew I didn't know everything about business, and so I joined an entrepreneur program called the Entrepreneurs Organization Accelerator Program. And I jumped in to receive mentorship, to network, and to continue learning. And I'm still in that entrepreneur organization program today, and it's been fantastic. So that's a bit of my earlier entrepreneurial career.
I love that. EO is such a fantastic organization. It's impacted so many, not only the lives of business owners and their companies and their growth, but all the people that are impacted by that, right? Yeah.
Oh,
So,
absolutely.
yeah, it's a great organization. So how did you make the move then from EO to Traction Capital? I suppose that's how you met some of your partners through EO, or?
Absolutely. And it's funny because I've had some people say the exact same thing, Julie. How did you go from motorcycles to private equity? And my mentor from the EO Accelerator program, his name is Shane. And Shane had really enjoyed his own business, but then he realized that he really enjoyed mentorship and working with founders and sharing from his own experience what had worked for him, what had not worked for him. So he mentored me and many others. And along the way, he started investing in some of these opportunities and some of these founders and really enjoyed that. And so over the course of maybe 10 years, he developed this thesis around moving from individual investor to a fund, an official management company. And he launched Traction Capital in 2019. He called me and he said, we're going to invest in founders. We're going to share our experience and leverage our experience. And we're going to help them run the EOS traction process. And it's going to make these founders, it's going to help them become more successful. Why don't you come and see what we're doing? And that's how I was invited to join and joined as a partner thereafter.
So then, as it relates to these companies and your role as integrator, are you helping with the integration internally in the portfolio companies you own, or is your role within Traction Capital as the integrator?
Yes.
Yes and yes.
My role is sort of broad.
Yep.
I'm kind of lucky to do what I love. At Traction Capital, we help entrepreneurs and their teams break through. And we do that by leveraging that EOS process and our shared business experience, like I mentioned. And so my role as integrator is within Traction Capital's management company, integrating the different departments. And so we have venture capital, we have acquisition buyout, we have strategic growth partner to support the founders, we have finance, and soon we'll have a chief people officer. So that's my role as integrator. I also sit in the acquisition seat where I'm leading our majority buyouts. I have a great team that supports and brings in and analyzes each opportunity before bringing it to me. And so we're shopping. We're looking for businesses to buy right now. I do also sit in another seat that we call strategic growth partner. And that's the one, Julie, where you mentioned, how do we help our founders out? The two buyouts we've done, and we've done 17 or so minority investments, but the two majority buyouts we've done, I work closely with their leadership team to just get updates, to help them break through obstacles and opportunities, to bring in resources where need be. And that's sort of where the uniqueness of Traction Capital shines, because we're working closely with these founders and teams.
That sounds like a great partnership. So then are you guys, like how long do you hold these companies, generally speaking? You said that you own two outright. So do you plan to hold them indefinitely, or what's the plan there?
We are not an evergreen fund by definition, and so we don't hold indefinitely. We're targeting typically a 3 to 5 year exit. Oftentimes that'll go, 5 to 7 years, because kind of a phrase that I coined years ago is, for an entrepreneur, and you know this, Julie, it takes twice as long and it costs twice as much to do anything you're trying to do. And so oftentimes a 3-year hold turns to 5 and a 5-year turns to 7.
Good to know. So tell me a couple of client success stories.
Oh my gosh, this is where it's so exciting, because we're working with these founders, and some of them are repeat founders. Some of them are first-time founders. And so the first one that comes to my mind, it really goes back to the mentorship piece that Traction was founded on. Shane had met the founders of Quickly. And so he worked very closely with Pedram and Yomiyu in just a mentorship and a friendship capacity. They had launched their firm. They're a platform for dental hygienists to connect with offices that need part-time or fractional help. And Shane helped them just as a friend. And then they became ready for an investment. We made an investment with them. We've really leaned in. I run their EOS sessions as a internal, because we're partners with them. We can run EOS with them. And it's been amazing watching them grow over 5 years. They have grown 78x in 5 years. And they're just a rocket ship, and it's a pleasure to work with them.
Yeah, super exciting. That's
That one's been a
fantastic.
blast. It's also not just about the revenue for them. They've been on the Inc. A few different lists. They've been on one of the Inc. lists 5 years in a row. And so they've got a great culture. They've got a great organization, and it's been a blast.
That's wonderful. Well, looking ahead, as we know, there are lots of companies out there that still haven't transitioned but need to. I did a little bit of research before we did the show here, and according to PwC, there's an estimated 4 to 6,500 PE-backed private companies that have had their exits delayed over the past few years. And so now they are systematically forced to bring these companies to market. And I'm wondering how that's going to impact valuations among the boomers who still need to exit. What are you thinking?
I think that's a good question. I think a couple different things. I think the boomers that still need to exit, they're going to really need to focus on having a really clean business and working with someone like yourself, or building their dream team like we talked about at Owner's Edge a few weeks ago.
Mm-hmm.
Because the companies that shine and that are polished and ready,
Yeah.
those are the companies that are going to get strong valuations. And the ones that, as we might say, have some hair on them or maybe rough around the edges, they may transact, but they may not get top value.
Right.
And then back to your other question about pent-up demand, it kind of depends on the size of the organization, I think.
Sure.
If a private equity is long in a holding, they may work out a continuation vehicle. They may kick the can, per se. They may have to take a discount if the company has not performed as well. And so it's not a great answer, but it sort of remains to be written. I think we have some interesting times ahead for those larger PEs with some of their holdings that maybe are not super clean operationally, or maybe haven't hit their growth plans.
So when it comes to technology, we were talking about AI before the show started. Tell me about how you guys are getting that implemented. I know you're the integrator, so how are you working with that with your portfolio companies right now?
It's really interesting, Julie, because we have to somewhat meet each founder where they're at. And some of these founders are leap years ahead of anything that we could imagine. And they're deep in AI, and they've rolled it out departmentally and across the organization. Some of them are just learning how to use AI. And so one of the companies we actually invested in out of our second fund is a consulting firm called Blank Metal. And they've been amazing to work with. MJ and the team actually put on an educational event for a half a day for our entire portfolio. And it was free to our founders. Their whole teams came. I think we had 50 people there, and it was deep learning, and it was awesome. And so that's one way that we're leaning in. The other is we're actually thrilled to announce we've actually hired Eric Scheel as an AI tech partner. And Eric is well known in the Minnesota area here. He is a former partner of Matt Meets. Matt and him had a great growth and exit years ago in the Salesforce consulting space. And Eric he's one of the smartest tech people that we know. And so he's on the team now to help each of our portcos out. He might spend an hour with them. He might spend 2. He might do a deep project with one of them for a couple of weeks. And so we're really trying to lean in and help those portfolio companies and their founders meet them where they're at.
That's fantastic. Yeah, I know that there's the owners out there that are interested and know that they need to implement, do not know where to start. And so it's very important that they have some guidance and, someone who can actually help them figure out, like, where do I start and how do I use this instead of patchwork, which I've talked about in the show before, to actually have a plan and figure out how does that relate to my ideal future state, right? And when do I want to exit? How do I get there? How's it going to get me there faster? How's it going to put me above the competition? All the things. And enjoy the ride while we're doing it. Yeah. So looking back over the past few years, especially during COVID, we all know what the sell side situation was like, and numbers were pretty good, but that's kind of changed. And so we're looking ahead here over the next couple of years. Buyers like yourselves, how has it changed in what you're looking for? I know you said well-run companies before, but what does that mean?
Absolutely well-run companies. It depends on the buyer. And so for us, typically we're looking for a 1 million of EBITDA profit up to 3 million. That's sort of our target, our strike zone. A lot of times that's a founder-led, founder-owned firm. And we can't get into the day-to-day and run the company. And so we either need the founder to stay on and help us transition, which is very typical, but that's a need, or the founder has internally identified the successor. That's ideal. Or the founder may be open and willing to work with us as we look for the successor externally. And so figuring out if the founder has a really good idea of what succession looks like and can have at least a couple different options or plans in place, that's really helpful to the buyer like us that needs someone to run the company. If they're looking to sell to an individual, that might be completely different because that individual might be buying themselves a job or entrepreneur through acquisition. So that might be a different story. Another piece that I think of from a clean company standpoint is we'd love to see financials that make sense. We'd love to see financials that we can understand. I know in my own business, I understand my financials because I'm in them all the time. But I know if I went to sell my business today, there'd be a whole lot of explaining of what is this income and what is that expense? And I would need to do some cleanup myself. So any founder that's thinking about selling, get started on it, a couple years ahead of time and have those books spick and span so the buyer can really understand them. A good growth strategy is really nice too, Julie.
Yeah.
We love to see past growth. That's very, very positive. And if there's not, and if the company's stable, that's okay too. But we'd love to see 3 or 5 or even 10 growth ideas. And maybe a couple of them are half baked. Maybe a couple of them have some data to back them, because then we can see how the founder and their team are thinking about what the next 3 and 5 years look like.
Yes.
Versus just us having to make it up on the fly.
And, if you're coming in as a potential buyer, it lends credibility to the leadership of the company that you may end up acquiring, right? That they're actually serious about the business that they own and have owned, because they have a plan and they have a growth strategy in place. And here are some things that, like you just said, maybe they're not fully executed, but we got them started. That is exactly the kind of work that I like to do with my clients when they say that they're ready to exit. Many times they think they're ready, but they're not. It's not a state of mind, right? It's a state of fact. And so if they're state of fact not ready, as an owner, right? Lots of risk maybe. And then on the business side, not well oiled yet. What can we do to shore that up and get people like you to look at us? So that's part of that whole exit planning process. I try to get involved as early as I possibly can. And it's so great for people who do the work that I do, because there are many of us now all over the country, to know companies like you, to know people like you, and have you in our network, because we have many times clients that would possibly be a good candidate for you.
And I fully agree, Julie. We work with many sellers that are not prepared. And we are comfortable working with them. It's just a much longer process. And those that might have an advisor like yourself and everything's in ship shape and nice and orderly, it's really a much smoother process for both the buyer and the seller.
So let's just talk for a minute here about selling. I'm gonna sell in the next 2 or 3 years. And I know deal structures are such that many times, and you alluded to this before, that the seller's going to have a little skin in the game, right? Maybe they're going to do, depending on, maybe, I don't know if this is your style, but rollover equity or seller financing or some kind of earnout. You like to have them stay on if they would. So what does that typically look like for you, or what would it look like maybe over the next 12 to 24 months if you found an investment that was of interest for your portfolio?
Yeah, we're somewhat flexible on our terms. We can even do a minority cash injection and be maybe a 30% or a 40% equity partner to help that founder get to the EBITDA that they might be really targeting. So that's one option. The other option is maybe we buy 51% or some sort of a controlling share, because the founder still wants to have a large bite at the apple or second bite, because they really see that vision. That's another scenario. A more common scenario that I'm guessing you see a lot is the buyer's going to ask the seller to roll maybe 10 to 30% equity. They may phase out, the owner may phase out over time, or maybe they stay involved in a light duty capacity. But it's very typical for the buyer to want that owner to have some skin in the game, to really put their money where their mouth is, if you will. I believe in my company. I'm willing to roll 20% of my equity because I see the upside that I'm selling you as the buyer.
Yes.
Where we see earnout is if an owner's done a great job accelerating growth and profitability in the last couple of years, and they're projecting that continued growth, it's hard for the buyer to pay a multiple on a projection, but
Yes.
perhaps there's an earnout. Maybe there's an extra half a turn or an extra turn paid on that EBITDA multiplier. And the owner then gets the benefit, the seller, I should say, then gets the benefit of the future growth, but the buyer maybe doesn't have the risk at close.
Sure. That, in my mind, when there truly is upside to look forward to, that is a win-win situation for both sides, right?
Absolutely.
And yeah, and and I know that it has to be win-win. Otherwise, don't do it. Maybe one more quick question, and this is happening more and more, I think, because there's still impatient money out there. There's still firms that are looking to do direct deals right with the seller and eliminating some deal makers once in a while. So there's all kinds of different things going on in the market. It's not just 3 or 4 different ways that we used to see. I'm a seller and my phone's ringing off the hook the last 6 months. You name it. I'm getting calls, I'm getting emails, I'm getting letters. Speak to that seller.
Fantastic. Congratulations. Get an advisor.
Yeah.
Get an advisor because
Get an
you might
advisor.
get a fantastic offer, and you might take that offer and be 3 months into diligence, and then the buyer walks, and that can happen.
Yes.
Or maybe they're just doing market research.
Yeah.
But an advisor can really help you make sure you're getting the right opportunity or right deal. And they can also be that buffer in between you and the seller. I'm sorry, between the seller and the buyer. And that's great even for us as a buyer, because if there's someone professional on the other side of the table helping that founder go through probably the largest transaction that they've ever gone through or will go through in their life.
Yes.
It's emotional, it's hard, it's difficult.
Yeah.
Have the advisor to help you keep the train on the tracks and continue to focus on your business. Because if revenue or EBITDA or bookings or whatever is the leading indicator falls off during that 3 to 6 month diligence, that's a problem for the buyer.
Yeah, it is. And sellers can't afford to lose time either, right? I've had plenty of clients over the years who have gone down that path and then contact me later. I don't have a whole lot of time to do a whole lot with them, right? So we really need to have time before we can make an impact. But they come to me after the fact, like they've been getting calls and things like that. And it's like, well, what did you share? What did you say? Are there any that are actually viable that we would want to, bring somebody in and have some decent conversations? And so, yeah, to your point, get an advisor, get a team of advisors, and really know and weigh out what your options could be, right? Give yourself that grace because, it, I know it. Owners have spent many years, many sacrifices, right? Sleepless nights sometimes, and we want them to have the best outcome possible.
Absolutely.
Yeah. Well, Brian, I really appreciate you being on the show. Thank you so much for joining us. And you guys are a great company. I hear such good things about you, and it's been great having you on the show. And let's just stay in touch. And we will have your contact information, obviously, in the show notes and on social media so people can get a hold of you if they need more information.
That's fantastic. Thank you so much for having me today, Julie. It's been a pleasure, and look forward to continued conversations.
Absolutely. And so for our listeners, thanks for joining us. Of course, we are really pushing our YouTube channel these days because we are going to start doing video with our podcasts and may go a little bit longer than we have been. So look for that, but please subscribe and share these episodes with your colleagues and your business owner clients. We truly appreciate it. See you again next time.